together. Uganda Revenue Authority, developing Uganda 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 together.
URA sinaba kusasula msolo Janet lete basa je nakuwa banange sina sasula URA aya esawa zigenda kugwayo asibye bino waliwo basa je nasemba yokuwa aya esawa zonna ebiza kubanga bye bino kangende biranja bikeberere afande njagala kudduka genda kusasula msolo ngenda kusanga basibyewo
nyabo icyo kibaje kipakusa tukimanyi nti URA yabigonza dda kati usokusasula kusimyo nyabo
nti afande
ongawunize star 285 ash ngogobeje mitejerejo ngofuna ka message ate URA yakuwaize chapula keba kubanga URA
thank you so much afande
okalubirizibwa okusasula omusolo gwa bizinesi y'ombudde genda bugenze mu simu nyonyige kamunyenye 285 hash abaddukanya bizinesi entono eziyingiza wakati wa miliyoni 10 ne miliyoni 15 omwaka bakwanguyirwa okusasula omusolo gwabwe ogwa presumptive tax nga banyigabanyezi kamunyenye 285 hash banyumirwe enkola enennyango etali mu nsindikagano.
Nyabo banange byaddala Janet omuntu awonyera yini gwe nyinda kusasuliranga ku simu labayo banage
tuzimbire wamu ebiseera by'omu maaso ebitangaavu nga tunyiga kamunyenye 285 hash olunaku lwonna essaawa yonna wonna wooli. Uganda Revenue Authority, tukulaakulanyize wamu Uganda.
The new and simple IFRIS mobile app is here. You can now manage your stock and issue fiscalized invoices and receipts at the tap of your finger. Simply go to the Google Play or Apple Store, search for the IFRIS app, download and install it, log in with your TIN and password, and you're good to go. The IFRIS mobile app is here to make invoicing and receipting easy. Download now.
Uganda Revenue Authority, developing Uganda together.
Good afternoon for those of us watching from the UK. Good morning for those who are watching us from the US of A. And I think good afternoon to those in Kenya. You guys are just our neighbors. But wherever it is that you are watching this particular Live Talks Lounge episode from, we would like to welcome you aboard. My name is Solomon Chimbugwe, and I'm your host for the day. It's important that we appreciate the spirit of hustling that Ugandans demonstrate, because I think Ugandans and Nigerians and Ghanaians for Africa, for the perspective of Africa, are those nationalities that you can be sure to find just about anywhere in the world. You can find them in Fiji, you can find a Ugandan in Madagascar, you can find a Ugandan in the middle of Equatorial Guinea, or just about anywhere else in the world. And because of that, we appreciate that spirit that you demonstrate to go and do something that is going to make your life better for you and your entire family. While at it, there might be some obligations that you must know about, things that you need to take care of back home in Uganda from the tax perspective. The Bible is very clear. Give to Caesar what belongs to Caesar. And for this particular episode, I have a team of distinct revenue officers who are going to be sharing everything that you need to know about taxation and the diaspora. Without wasting any second, please allow me to introduce the guests that we have tonight on the Live Tax Lounge, starting from my immediate left. Jim, Knox, over to you. Say hello to the viewers, tell them who you are, what you do here, and we take it away.
Good afternoon, our dear viewers. My name is Jim Kagolo. I'm a supervisor in the Domestic Taxes Department, and I'm glad that I'm going to be taking you through the different tax issues affecting our dear sisters and brothers in diaspora.
Thank you so much, Jim. And on my far left is an amazing lady. She works with customs. Rhoda, please greet the viewers and tell them who you are and what you do here.
Hello, ladies and gentlemen. My name is Rhoda Basemera. I collect tax for the government of Uganda. I'm a customs officer deployed in trade division, specifically dealing with valuation, customs valuation. Thank you so much.
Thank you, Rhoda. Now, this conversation starts with the word diaspora. That word can be a little bit confusing for some of us. But beyond the English, exactly what do we mean by this? And Jim, you can take this one.
Thank you. Diaspora is basically used in reference to people who associate with a particular geographical location but reside in a different geographical location. So when we are talking of a diaspora, we mean the citizens of Uganda but currently living in other countries.
I'm Ugandan, obviously, and I'm living in Kenya. Am I in the diaspora?
If you go to the details of a citizen, in regard to the East African community, a citizen is a person who stays in the region. So you may not be in diaspora if we are to take the definition of a citizen in regard to the tax laws.
And if I'm living in Abuja?
You are in diaspora.
Canada?
Diaspora.
UAE?
Diaspora.
Indonesia?
Diaspora.
Bahrain?
Diaspora.
Katubeye. You've made it very, very clear. Now, from the tax perspective, domestic taxes, I know there are details in there that you are going to, break down. Is every person who is living abroad once in a while at some point in their lives necessarily considered to be, a foreign citizen for tax purposes, or it's not necessarily the fact? If you can break it down for us.
Okay, it is. It depends. It is two-way. If I can be in diaspora, but I'm considered a resident for tax purposes, and at the same time, I can be in diaspora and I'm considered a non-resident for tax purposes. In regard to Uganda's tax laws, one of the conditions is a person should be having a permanent home in Uganda. So even if you are in diaspora, but you have a permanent home where your socio-economic life basically depends.
Somewhere here in Nansana with family.
In Nansana, you left your family here, you can be considered a tax resident even when you're staying abroad. The other aspect can be in terms of the number of days. If you are in Uganda for a period averaging to 183 days in any 12 months period, then you will be considered a resident for tax purposes. And also, if you stay in Uganda for a period averaging to 122 days in the current year of income and in any of the 2 preceding years of income, then you will be considered a tax resident. Then also the other category, we have the people who are government employees but posted outside, like the ambassadors. For those ones, even when we do not consider the number of days, we do not even consider the permanent home. As long as you are a government employee but posted outside, you are automatically a resident for tax purposes.
Let's suppose I'm Ugandan and I'm working with the Ministry of Foreign Affairs and I'm posted to the Embassy of Uganda in Tuvalu. I hope we have one.
Yeah.
How is that?
You are a resident for tax purposes. Even when you spend 5 years without coming back to Uganda, you will be a resident.
Interesting.
Maybe to add on, someone will be interested, why are we looking at resident and non-residents? The taxation in Uganda is basically on two aspects. You have the residence and the source rules. When you are a resident taxpayer, it means we tax you on all income sourced from all geographical sources. Like you, Chimbugwe, you are a resident in Uganda. But I should say, Wakolam, you have other businesses in South Africa, elsewhere in USA. The fact that you're a resident for tax purposes will tax you on all that income. But if you are non-resident, we tax you on only income that is sourced within Uganda. That's why the aspect of residence is very key in determining tax.
Interesting. So for some friends of ours, Zari Hassan, as an example, with interests here back home in Uganda, obviously a resident, citizen of Uganda, but she's always on planes, going to her other interests across the continent because she's continental like that. The picture for her is that she's taxable for all the sources of income.
Yes, for all the sources of income. She will have to declare it in Uganda.
Interesting. We had to make that very clear for the sake of people who are tuned in. But now I would like to get granular with it. As an officer charged with domestic taxes in the country, and for someone who's watching you, they're tuned in, watching from some place, somewhere in the world, what are the tax obligations that they must know about concerning them and where they are posted in the world?
Okay, thank you for that question. Now, the tax obligation will still stem from where a person is resident or non-resident. Okay? If I am a resident, of course, you have the generic obligations, filing the returns and paying taxes alongside others. But I would say, given that URA is into tax collection, the biggest obligation would be filing and paying the taxes on time. The question would be, if I am to file a return, what am I including in the return for me who is in diaspora?
So
that
obviously you have to file a return.
You have to file a return.
Even when you're abroad.
Depending on the nature of income.
Okay.
So if you are abroad, like I said, we shall tax you on the income that is sourced from Uganda.
Okay.
But it depends on which type of income that you're earning from Uganda. If you have business, you will definitely file a return because that is business income. If you have rentals in Uganda but you're non-resident, you're in diaspora, you may not be required to file a return, whereas you will be required to pay the tax. So depending on which type of income, the obligations may vary.
Very correct. Let me throw a quick spanner in it because this is the Live Tax Lounge and we have viewers who are tuned in and they are watching and they are keeping up with the proceedings of the show. And it is a highly interactive show. We encourage them to ask questions off the cuff as we are having the conversation. And there's already an anonymous attendee who has dropped the question via Zoom. And I think it's important that I run it by him because it is related to what you just talked about, one way or the other. And he's saying, what if I'm abroad and I have registered a company that is different from me, the individual? What is my situation?
Okay, a company is a separate legal entity from the owner or the director. Okay, so you can be a director in a company and you're non-resident as a director. But a company will take it, if you go to section 10, it will tell you the conditions under which a company will be resident for tax purposes. If it is incorporated within the laws of Uganda, then it will the company, not the director, because they are separate legal entities. So if the company is at any one time incorporated within the laws of Uganda, then it will be resident. It may be incorporated in any other law, but as long as majority of the company's operations are undertaken in Uganda, then it will be considered as resident for tax purposes. So the criteria for determining whether it's a resident or non-resident will vary depending from whether you are an individual or a company or a partnership.
Thank you so much. There's another quick fire question that has come in from and he's saying, for the Zari example, does it depend on number of days that she has been in Uganda for her to qualify to pay taxes in Uganda for all her sources? I think he is seeking clarity.
Okay, I think when I was looking at the conditions we consider for a person to be resident, I highlighted that.
Yes, you did.
I talked about having a permanent home in Uganda, having stayed in Uganda in any 12 months period, in a year of income for a period of more than 183 days, or 122 days in the current year and in the 2 preceding years of income. So in determining whether she's a resident or not, it is true you will consider any of those 3 aspects.
So as long as the one of the 3
yes,
is actually fulfilled.
It is not, each is a standalone. You fulfill one, you automatically become a resident. You do not have to meet all the 3.
Perfect. Thank you for making that clarity. And that brings me to the next question. You hinted on it, but for purposes of clarity, let me ask again. Let's suppose I'm currently, residing abroad, and I'm meeting maybe one of the 3 criteria that you've actually mentioned, and I earn my money. Do I still need to declare my income to URA by way of a tax return?
Still, it depends on whether you're a resident or a non-resident. Let me start if you are in diaspora, but you're still a resident. If you're earning a business income, you will still have to declare that income because you're a resident from all geographical areas. But if you're in diaspora and you're a non-resident, then you will declare the income that is sourced from Uganda. But it still goes, which type of income am I sourcing from Uganda? If I am getting a dividend, I have shares in a company that is located in Uganda. The moment I get those dividends, I am sourcing income from Uganda. But the obligation to withhold is on the company paying. So whereas, and it is a final tax if I am an individual and I'm a non-resident. So if it is a dividend, rent, I will not be required to file a return, but I'll be required to pay. But if it is business income, I will definitely be required to file a return whether I'm a resident or non-resident.
For purposes of clarity, clarity is everything. Let's suppose I left Uganda some 4 or 5 years ago. I have no dealings in Uganda whatsoever. And I'm not qualifying for any of the residency rules that you've indicated. Do I have any business with URA?
No.
The answer is no.
If you're not sourcing income from Uganda, you don't have business with URA.
Thank you so much. That question was quite important. And it's at this point that I would like to bring in Rhoda, because it is important that people get to appreciate that, yes, we have the domestic taxes side that has its own tax obligations and the requirements for the people who are living in the diaspora to fulfill. But there are also elements that people must appreciate from the customs perspective. And that brings me to the very first question that I would like to ask on behalf of the viewers. And that's a question that says, for a person who is living abroad and they are planning to send some materials back home, I'm living in Jamaica, and I want to send some goodies to my family or friends back home in Uganda. What are the key fundamentals that I should know about the process of customs valuation in Uganda? It is an area that confuses so many people.
Yeah, thank you so much, Kim, and our dear listeners that are tuned in or are watching this first. Before I even delve into the customs valuation, is to bring us to speed that if you're coming back from abroad or wherever you are, you come with goods.
Yes.
you do an importation. So that the goods that you bring in, that regards now an importation. So as long as there is an importation that is happening, then customs comes to play. So this is where we come in.
Okay.
So when you are coming and returning to the country, whether you have come for a visit or you are actually returning permanently, or you have come to work, or you've come to work because you're out, okay, maybe you're just coming to work and you are staying there and you decided to come to Uganda. For as long as you import goods or you come with goods, please note that here we are referring to goods which are new. For as long as they're above $500, then we tax anything that is above $500. I know there is always a confusion of many wondering, I'm going to come with a suitcase. Do you think my goods, those are questions that we've seen, do you think our goods are going to be below $500? No, we are saying if it regards your shirts, your clothes, your shoes, your personal effects, things that you have used or you use in your daily life, we are not looking at those. We are only focusing on
You're looking at my new Gucci shoe.
The new Gucci shoe
In
that
a box.
is in there, that is in the box. And so these personal effects, we allow you an exemption and say, okay, fine. If they are personal effects, take them. But they should not be in commercial quantities. Commercial quantities in the sense of
10 iPhones.
10 iPhones. How many iPhones can you hold at a time, Kim?
Maybe 2.
Maybe 2 or maybe 1. So the moment you're getting in quantities that are beyond those that are considered for personal use, then URA has a right to tax. And we do this for purposes of protecting our brothers and sisters, the same brothers that you left behind in Uganda. They have already paid taxes on their goods that they are selling in Uganda. So we are saying, come and support the local economy. They have already paid taxes. So let's protect them by not allowing other goods to come in, because you will not buy from them. So we are actually doing it to protect the Ugandan economy and the traders in Uganda. So once you bring in goods that are above $500, the new, then we will tax them. But please note that if you send these goods without you coming with them, that is what we call the unaccompanied baggage. If you're just remaining in the US and saying, oh, my mom is in Uganda, let me send things. Here we no longer consider the $500. We actually look at anything that is above $50. So anything above $50, for as long as the baggage or the cargo is unescorted, is not accompanied, then is taxed. Now that we have that right, now that we get these goods that we want to tax, URA has to determine the taxes that they have to charge. Now that is where the valuation bit comes in.
I think there's even a third scenario.
Yes.
Maybe I should speak to it.
Yes, please.
I've not returned.
Yes.
Sigadeo, I'm still in Jamaica.
Yes.
But I'm sending this crazy volume of goods back home.
Yes.
Maybe they even fit in a container or half a container.
Yes.
And I put them on a ship and the items are coming to Uganda.
Yes.
There's also that scenario.
Yes.
It's not necessarily the one where I'm sending maybe a laptop to my kid brother or a nice stuka for my mom. I'm sending things. I'm importing.
You're importing for
Very
trade
seriously.
or for other reasons,
Yes.
whatever reasons it is. Yes, still in that scenario, for as long as the goods are above $50, then we are coming to tax them.
Okay.
Now, when we are getting to, when we decide to tax the goods, then we get to value them. Especially the tax is usually a percentage of the value of your goods. Now, the primary method that the law permits, the customs valuation agreement, is that we use the transaction value method. Here we are saying, ladies and gentlemen, when you buy things, especially that we're looking at things they are new, meaning you've just bought them around that same time, please send your documentation together with your goods. Have your invoices right, your packing list, your contracts that you got involved with your sellers, and have your documentation right. So when you have your documentations, then it means we're going to calculate our taxes basing on your documentation. Now that's the transaction value. But we also understand that some goods are bought off the market, maybe in auctions, maybe it's just a black market, and then you do not have the invoices, or you sent them and you did not send this documentation. So in such circumstances, Kim, and our dear listeners, then we consider the transaction value of identical goods. Identical in the sense that you're not the first person to bring in this iPhone. Someone else has brought it in before. So we go in our systems and check and see who has brought an iPhone from that same country, the exact iPhone. And then we look at the value that they declared at using their documents. And then we consider, so the country of origin is always the same. We compare goods at the same commercial level. If you're bringing in 2 pieces, we look for someone who brought 2 pieces.
iPhone 13 from Germany.
It's iPhone 13 from Germany. And then it should be, if it's 2 pieces, 2 pieces. Okay? That's where the identical comes in. If you're saying Coca-Cola, we are saying let's deal with Coca-Cola. It's iPhone. So if there is no person that has brought in those goods around the same time, exact, then we go for the transaction value of similar goods. Similar goods in the sense that the goods are not necessarily the same, but they are interchangeable. Chikolanga samona, like chizigo, eh? Like if you don't have maybe an iPhone and you're not able to have an iPhone, what are you going to have? If you don't have an iPhone, then it means what other phone are you more likely going to look at?
Oppo. Let's go with Samsung. Let's go with Samsung.
Yes. So if you're not able to find in our details, if we're not able to find maybe an Apple phone, an iPhone, we're looking at Samsung. We are not going for maybe a Techno or whatever, but we look at goods which have the same market.
In the same league.
Yes, they're in the
Literally.
same league. So we look for that information. Someone else has traded like this and this information has come in. So if we are not able to find that information, Kim, ladies and gentlemen, we'll still help you because we are here to facilitate trade. We will still collect the taxes. So then we go and look at how much is this trading on the market. Okay? Now that's, we work backwards, the deductive method. We work backwards. We see this iPhone is selling maybe 3 million on the market. Now this person who is selling it, but we look at a wholesaler who is selling it in the most aggregate quantity. Is the one that we consider. So we consider that maybe they have put a markup, a profit of like a 10%. So we remove the expenses that they could have made, the rent, the transportation, and all that. We work backwards. The value that we remain with, we consider it as the customs value. Then we apply the percentage and we collect tax.
You basically look at it from the perspective of the highest amount that they can sell after all the value addition.
Yes,
like after considering every other thing that they've added on as business people.
Yes.
Rent, what?
We subtract that.
So you deduct all of that until you arrive at what could have cost.
Yes.
Without any of these expenses.
Yes, without any of those expenses. So that we remain with is what we consider as the customs value, and then we apply the rate. So even when that fails, especially people who bring in bigger quantities, really, we fly out to China and go to the factory. Now we work backwards, computed, look at what are the raw materials. Now this happens especially when there's large tax, a lot of tax that is involved. So you work backwards and you're like, okay, if we're looking at a book, it has some element of the cover, which has element of leather, it has in some element of paper, the raw materials that are involved. Then you calculate, then you look at a factory, there are overhead costs. There are those you need to pay the labor to be able to produce these goods. So you look at all those costs, then you add them together. You become a manufacturer at that point. So when you add up those costs and consolidate them, then you end up with the value of the good. Even when that fails, ladies and gentlemen, we don't let you suffer. We now say, let's fall back. We fall and rise up.
How is that now?
Now that means go back to number 2 of identical goods, but now relax the rules a little for the client. Remember, we had said that with the transaction value of identical goods, we look at if you have brought in like 2 iPhones, we're considering someone of 2 iPhones. So this time around, we're like, there's no person of 2 iPhones, but there's a person who brought 1 iPhone, or there's one who brought 3 iPhones. So we look at their value and reduce the elements that would easily fit now to your quantity.
I get you.
And then after we've gotten that value, we apply the percentages that we have to apply and we collect the taxes. So simply, that is what customs valuation is about. That's how we value and end up with the rates that the value that we are going to consider when we are applying the tax rate.
Wow. Have you had scenarios where you actually had to apply method 6? The very last one that you talked about.
The fallback.
Yes.
The fallback is the common one that we apply, actually. Most times we find. The unfamiliar one is the one where you have to go to maybe China or the factory. Where you
Method 5?
Yes, the 5. It's the most unfamiliar one, where you are actually computing and you're like, let me deal with the raw materials. It's the unfamiliar one. And most times we end up in that when we have court disputes and then the client is still insisting the values you've given me are not the same. And then the court rules that this has to be established. And at that point, everyone has their cost. Who is meeting the cost of what? Then we take the things to our laboratory and then establish. We have a URA laboratory, which is the TID, the Tax Investigation Department has a lab, forensic lab, where they are able to establish the composition of everything in any material. So we have the capacity as URA. So the laboratory people establish and say there's a percentage of this, a percentage of this, a percentage of this. We consolidate and then we are able to value. Yes.
Interesting. And that brings me to the second question that I would like to ask you.
Yeah.
And I mean, living life online, this is one of the commonest questions actually that we get asked when we are doing this work of digital community management. Someone is living abroad. More often than not, when these people are sending things back home, or even when Ugandans are importing, a good bunch of them actually do the importation, for lack of a better word, blindly.
Yeah.
Like someone doesn't have a very clear picture, estimation wise, of what this thing that he is bringing in might cost. And that brings me to a question, because I know our friends are tuned in and they are probably wondering, if I want to get an estimate of what this thing is going to cost in terms of, you know, tax, the tax implication on a product, before I even bring it from the other country that I'm trying to get it from, are there places I could go to try to, you know, arrive at the indicative valuation or something that is close to what the value might be tax-wise?
Yes, Kim, thank you so much. Now, that is very possible, especially with the motor vehicle. URA streamlined out the used motor vehicle guideline. It uploaded it on the URA website, which is www.ura.go.ug. So it's for public viewing.
Okay.
So every month we review the guide. We state the values at which a particular used motor vehicle should cost. Now that guide is on the URA website. Now once you go on the website, you look out for customs and excise, then you go under customs valuation, and then you're able to see the motor vehicle guide. In that guide, you pick the value of, you look out for the different car, depending on what you want to import, search based on the model, look out for the young manufacturer, look out for the cities,
engine size.
the engine size. So once you have reached on your value, then just pick that value on the same website. When you are under the home button and you press, just at the bottom, there's a tax calculator for that motor vehicle. Just put the details of the car that you want. Now, the CIF, ladies and gentlemen, don't use your own CIF, the one maybe...
the one you negotiated with
the one you've negotiated with maybe Be Forward or Trade Car View or whichever people that are selling to you. No, you do not use that, because it will not give you the estimation of what we are charging. So if you're sure and you've zeroed down on your car, go to our guide and look for that particular car. Pick the value, put it in the tax calculator, and the tax calculator is able to calculate for you all the taxes. Ugandans are very innovative. There's a team of people that actually innovated this calculator without you going to look for the value. They usually get this guide and back end it to their system. When you go on our website, you look for something called Motor Car, MOTOKA, Motor Car. So a Ugandan invented that. It's online. You just go and put the details of your car and it will calculate. You try it and compare with if you went and picked the value yourself. Just try and compare that too. So that one makes it faster. Even if you put, maybe you put a particular car, so it calculates for you all the 5 types or 6 types that could be in our guide. So that it helps you be able to compare the different taxes that you're able to pay. Now, for general goods, ladies and gentlemen, that is something that is is still work in progress. It is not something that is yet accomplished.
It has not yet been automated to the level of motor vehicles.
Yes, and for the reasons that are clear, that because with motor vehicle it is defined, the value is cut out. The law is protecting the East African Customs Management Act. It was domesticated to protect that. Now that is defined for used motor vehicle. But then for general goods is because we have to follow the canons of trade. And then we have to use the valuation methods. So you don't have a defined method, a defined value for a particular good. So it depends on the documents, the volumes that the person is importing, because that influences the prices. Someone who is selling to you 1 carton will not charge you as a person who is buying a container. So because of those dynamics, it is still very hard. But what we always advise, of course, there are those rates that are known and where you know that if it's raw materials, import duty, they're going to pay 0%. If they are semi-finished goods, maybe they are falling in the category of 25%. Then if they are finished goods, most of them range between 35% and go as much as 60% for sensitive goods. If you're getting into chocolates, alcohol, those sensitive goods. So with the general goods that you know they have a bracket. But what you can do, or what I would advise, when you go online, you can Google out for the CET, the Common External Tariff. It's a book. It has the rates, especially when it comes to import duty. So it shows you what import duty you have to pay, whether things are 0 or 35. Now, having looked at that percentage, that one specifies only the import duty. There are other taxes. VAT has to be paid. You will know that VAT is at 18%. You will know that you have maybe withholding tax to pay, unless you are exempt from those taxes. You will know you have a 6%. You know you will find excise duty depending on what you are bringing in. And the other thing that we always encourage them to do is URA opened up the touch point where anyone is able to log in and ask and inquire, and we'll give you the information. Yeah.
I think I dream of a day when Ugandans are not importing from, you know, a blind man's angle. You know exactly what you're going for. You know exactly what the tax component might be before you even go to Japan or to China to bring that commodity in. That way, I think we might get to that point where someone doesn't come back home and then they're getting stranded with this money that they can't clear because of, you know, not planning earlier.
I see you concerned, and that is where we are headed as URA. That is work in progress, and that's what we are desire. So
fantastic. That brings me back to Jim. Jim, I'm coming back to you with a question that has come in from one of our viewers, and it's a 2-in-1, because that question is going to bring me to the question that I actually had lined up for you regarding this issue of taxation and the diaspora. What is the treatment of a resident company earning income from sources outside Uganda? And this company has already declared all income in Uganda, but has paid taxes in countries where they have sourced the said income. That question is in line with the question that I wanted to ask, because now the question I wanted to ask was a question to do with people who are caught up in between, like you're probably living, for lack of a better word, in 2 countries, even as a company. You're maybe resident here, but you're sourcing from there, or you're resident there and you're sourcing from here. Do we have double taxation agreements in place, or do we have mechanisms that are here to make sure that a company is not necessarily paying tax twice?
Okay. As Uganda, we have particular provisions that counter double taxation. We specifically have section 81 of the Income Tax Act, which talks about the foreign tax credits. That, like the question came.
The foreign tax
credits. Okay. The question came, I am a company resident in Uganda for tax purposes, but I've sourced income from South Africa or USA. The laws in Uganda require that I declare the income from all geographical sources, but I've already paid tax in South Africa. So I am going to file the return, include all the income. But based on section 81, the tax I paid in South Africa is going to be deducted from the tax I've declared. So I am only paying the difference between the total tax declared minus what I paid as tax in South Africa, where the income is sourced. So we have the foreign tax credit, which is allowed as a credit. It reduces the liability that a person is supposed to pay to avoid double taxation. That the part of the tax that you paid in the other foreign country, you remove it from what you have to pay, such that you do not pay twice.
I want to see if I've understood it for the benefit of my friend who's watching from South Africa. Let's say company is resident here and it has sourced from South Africa, and some money has already been deducted by SARS, the URA of South Africa, in terms of tax. URA or Uganda has a provision in place where that money that has already been, taxed off this income that I've sourced from South Africa is taken care of or factored into the tax that I'm expected to pay in Uganda. Then we have a conversation. Nice.
But it also depends on which income.
Okay.
Because that is for a company.
For the individual?
For the individual, if I am an individual and I am employed in any other country, as long as they've deducted the equivalent of our pay as you earn in Uganda, I will not have to pay any other tax. Even when I am a resident, I will not have to pay any other tax in Uganda. That will be fine. That is for employment income if I am an individual.
What about in this scenario? Because we see it a lot. We are having so many globetrotters, especially in the professional industry. Couple of weeks back, Vusi was here. Vusi Tembekwayo, a South African. And we also have scenarios where some Ugandans are actually going to these other foreign countries for speaking opportunities, and they're getting paid good money. So the person is obviously resident here, but he has gone to, say, South Africa, and he has spoken at a convention as a keynote, address deliverer, and he has been given a significant amount. Like he's coming back with a bag. How is that situation?
Because when you go outside, it will be outside the component of employment. Because what I talked about in Section 8 is basically when you are
employed.
In employment. If you go to do consultancy, that is more or less of a business. So there I will be required to declare in Uganda because it is business income. But in case they deducted from the other side, it will now be provided to you as a credit. But still more to that, Uganda has double taxation agreements with 9 countries.
Ooh.
Okay?
9 in Africa, 9 worldwide.
9 worldwide. We have 2 in Africa and of course 7 outside Africa. And why do we have the double taxation agreement? It is basically to remove double taxation. And you have basically 2 types of double taxation. You have the juridical and the economical. I will dwell more on the juridical.
Juridical.
Okay, basically it is
what do you mean by that?
Jurisdictional.
Okay.
Okay. That the income has been taxed by more than 2 countries in the same hands. The person pays comparable taxes in more than 2 countries. Why do I say comparable? If you pay income tax here and you pay VAT in another country, those taxes are not comparable. So for us to say that it is double taxation, they have to be comparable taxes. So if you're taxed in Uganda and you're taxed in South Africa on the same income, in the same hands, that is juridical double taxation, because different jurisdictions are taxing the same person and on the same income. How does it arise? Like I gave you under Section 9, the conditions we consider the person to be a resident. Now, assuming you will have the same laws, of course, now this year is a perfect example because it has 366 days. I talked of the 183 days, which is basically half of the 366 days. So assuming a person stays in Uganda for 183 days and also stays in South Africa for 183 days, and we have the same laws. So each country is going to claim residence on this same person because you've stayed
Rightfully so.
183 days and you've stayed 183 days here. If at all you had the same laws. So that brings a residence conflict. Because South Africa will now tax you on the assumption that you are tax resident in South Africa. Uganda will also tax you on the assumption that you are tax resident in Uganda. So that brings about double taxation. It could also be to source. Two countries claim the income is sourced from that country, depending on the laws. Now that brings about source to source conflict, which also brings about double taxation. That two countries are taxing because each is taking that income to be sourced from Uganda. The other obvious reason is where the income is sourced from Uganda, okay? But the person is not resident in Uganda. The person is resident in South Africa, but the income is sourced from Uganda. So Uganda is going to tax based on the source rules, and South Africa is going to tax based on the residence rules. So that brings about the source residence conflicts. So that's basically how double taxation comes about.
Interesting. I love the fact that you made mention of that. And I'm going to get back to you on it because we do have a couple of questions that have already come through from our listeners. And one of them is particularly of interest. And I think it's important that I make mention of it at this very point. Okay. Anonymous. I don't know why these guys hide their names. We want to know who you are. So when you're asking the question, please ask it with your chest. Anonymous is asking, is foreign income also subject to VAT? If no, won't there be a variance between VAT sales and income tax sales? That is Mr. Anonymous's question.
Okay, Mr. Anonymous, I see Mr. Anonymous probably has ever had a compliance audit and they were comparing income tax to VAT.
Possibly.
But going back to his question, foreign sourced income, VAT is a jurisdictional tax. For us to charge VAT, let's look at the place and the time of supply. If the place of supply is not Uganda, then there will be no VAT. Okay? But that does not mean that you do not have to pay income tax, because income tax worldwide, whereas VAT is jurisdictional. Okay? Now we should not be worried about comparing VAT and income tax. All you need is to explain. For example, Kim, you may be here, you have your clients in Southeast Sudan, they've ordered, you deal in selling cars. You order for a car straight from Japan, up to Sudan. Now there is no VAT on that transaction because the place of supply is not in Uganda. But the profit you've made out of that transaction, because you're resident in Uganda for tax purposes,
and have sourced an income,
yes, from Uganda, based on your residence. Okay, you've sourced it from
South Sudan,
but because you're resident, we tax you on worldwide income. So you'll have to declare that income for income tax purposes, whereas VAT, it will not be liable to VAT.
That makes it very clear. Thank you so much. So far, so good. I just have a couple of more questions, and I'm going to, quickly run into them. But questions are also still coming from our viewers on all the platforms, and I'm going to be working with the technical team to make sure that we get all these questions that are coming through from across the board. But the next question that I have goes to Rhoda. Again, I'm going to picture myself as a person who is living abroad. This time, say, I live in Lausanne, Switzerland, and I want to send some things back home. Are there items whose importation is not allowed in Uganda?
Yeah, thank you so much.
Or you guys take everything?
No. We definitely have the prohibited ones, and the ones where you're saying we prohibit them, we don't allow them completely. And then we have those ones which are restricted.
You have an absolute no?
An absolute no.
Then
and
you have a yes but.
Yes but. Yes. So the no completely ones are the ones where you have maybe things like counterfeit money.
Okay.
You have pornographic materials.
Okay.
Maybe dildos, which is common and where we get people so much, especially at the border points while coming in. And someone says, I don't feel my man or my woman does not satisfy me and I want to quicken the process. But for us, we consider those pornographic materials. So
And the person is saying that this is probably not pornographic material.
yeah, and they are assisting, but then we consider it as a pornographic material. So such, we do not allow them. We do not allow sending of used electronics. Used electronics, and those are the common ones that our viewers or people in the
Rather,
diaspora
at this
come
point, you're talking about the things that are prohibited. Absolute
yes,
no's.
prohibited. It's absolutely no.
Don't come to Entebbe with.
Please do not send them. I'm saying don't bring in used electronics unless they are personal effects and you're moving with them. But if you send them as cargo, they are prohibited. Used electronics. We're looking at here. We're looking at laptops. We are looking at phones. We are looking at maybe the cookers,
Fridges.
the fridges. For as long as the fridges, those ones, if you send them as cargo, not that you're coming with them as, if you bring them together with you as personal effects, then there we allow you to take them under the exemption of personal effects.
What's the situation with TVs? I know they are the flat screens, then they are the pregnant TVs.
If the pregnant TVs or the chibina or the ones you call them the pregnant TVs. But if TVs are used, we do not allow them in the country, ladies and gentlemen. Those are electronic. So those are completely prohibited goods. We are looking at things, we are looking at you killing animals out there and bringing in the ivory, and then you're bringing in elephants, you're bringing in traps that actually can be used to kill game animals, you're bringing in articles, apparel that has coat of arms of maybe Uganda.
Come again?
You're bringing in goods, say, if you're going to bring in like maybe common with at that time where people were printing uniforms that are a uniform, or then they have the coat, any of the coat of arms of Uganda, and then you're bringing in that printed apparel, as long as it has the coat of arms. No, we prohibit it. We do not allow it in Uganda. Okay. So those are a no bringing in.
Absolute no's.
Absolute no's are those things that I just talked about, among others. Then we have those where we are saying you can bring them in, but please, on condition that you have permission from the relevant authorities. Here we're looking at things like drones. So I'm talking about the common ones that where people end up falling prey. We have drones. You're the technical guys, flying.
Those things.
Yes, those ones that fly together with the cameras that you use on functions. So the drones, we limit them for security purposes because they have a wider coverage and they can see beyond a particular jurisdiction. So you need to get permission from Ministry of Defense for you to be able to bring in a drone now. Then we have firearms and ammunition. Even those are restricted. You need to have permission, a written permission. Don't say so and so said Gamba. No, when someone has said, so there should be a written permission. So you have the firearms. Then you have the armored vehicles, the cars, the ones that are armored. Those ones, even those are restricted. And you have several of those, even agricultural seeds, where it is Ministry of Agriculture has to give you permission.
But I don't just bring in my seed.
No, you don't, because one seed like this can kill the whole country. So they need to have tested and known that you passed the test. That is why we work with other agencies like Ministry of Agriculture. We also have even the medicine. The medical bit of it is also restricted. That's why we have NDA coming in. So those relevant authorities give you permission. Among the other things also is the gaming equipment. And for obvious reasons, we are protecting our youth. So gaming, casino equipment, all those equipments, you need to have, they are restricted. Not everyone can just bring them in. So you need to have written permission for you to be able to bring in those things. Yeah.
With the exception of those, the other things, like someone can bring in?
Most of them you bring in. At least I've mentioned most of those. Or you could actually go to the East African Customs Management Act and look out for the prohibitions. You look out for the second, look out for the second schedule and look out for the exemptions. They are listed in there. East African Customs Management Act. When you go on Google and type in ESC CMA, you will find it, and then you will find that schedule listing for you all these things in details, so that you don't fall prey.
All the things that are prohibited,
All the restricted.
all the things that are restricted,
Yes.
and the allowables.
And the allowables. All of them are listed in that East African Customs Management Act.
Thank you so much. My friends who are abroad, please don't fall victim. Make sure that you take a look at those lists so that you are very certain whether what you are bringing in is allowed in Uganda. This controversial one, and it's normally a question that I get online.
Right.
It's concerning cars.
Yeah.
I know Uganda sometime back made a move to ban the importation of cars that are older than 15 years.
Yes.
Uganda now is also interested in young cars only. Cars whose year of manufacturing exceeds a 15-year cap are not allowed. Is that so?
Yes.
And we've had a scenario where our friends who are living in the diaspora are under the impression that this only applies for a Ugandan who is importing the motor vehicle. What is the situation for a Ugandan who has been living abroad? You've been enjoying this Fiat. A Seiko, it's about 16 or 20 years old, but it's a classic and you love it. And now you want to bring it back home. How do they go about it? What's the situation in that regard?
The law, once applying the law of prohibiting the number of years, it does not only affect those that are just bringing them in new. Even when you have it as a used car, you've been driving it, for as long as it is beyond the 15-year cap, we do not allow it. If you feel that it is a vintage car, there's an option where the Vintage Association is granted permission on the cars that they bring in for exhibition and all that. You apply under them, and then it comes in as a vintage car. If you really consider that it is vintage, and they should be able to ascertain that it is vintage, because they're the ones who write on your behalf, okay? But other than that, whether you've used these cars or not, and you've been owning them, you will still have to operate under the 15 law cap.
Quite interesting.
Yeah.
And quite insightful. So if you are abroad and you've been driving this car and it's older than 15 years and you're considering bringing it home in Uganda, please, the law is saying no. Bring in a car that is younger than 15 years, for lack of a better word. That brings me to the next question. And this particular question is coming to my friend Jim Nokia. It's a 2-in-1. I'm living abroad, and it's at that point I've listened to the gospel of tax, and I'm convinced that maybe there's something that I actually need to be giving back to, my country, because I'm certainly qualifying. If someone is at that point, how do they go about the whole payment situation? Do we have platforms that people can actually optimize? Is there a dedicated desk that is working with people who are living in the diaspora? Ugandans who are, living in the diaspora?
Okay, thanks. If any colleague is in the diaspora and has an obligation to pay, we are in a digital era where everything is on the system. So we have different options that a person